Yes, a very good morning to all of you. That's nice. A very good morning to all of you. Okay, right. So a very warm welcome to the CA Intermediate Auditing and Assurance. So a new entry for you into the world of auditing. So far you've entered into the world of accountancy, law, economics, quantitative aptitude and all of that. But now the next 3 years of articleship or whatever articleship is going to be planned for the further, that is mainly like as a chartered accountant, what is it that he is known for? Okay, as a chartered accountant, what he is busy with 31st March and 30th of September or 31st of October, he's busy with the audits. He's always busy with the audit. Tax audit is there or some other type of audit keeps on going. And the moment you see, they come to know about CA. And at the moment you listen about the term CA, the next thought which comes to your mind is regarding the audit over there. Okay, right. So like say if I have to cross a road, if I have to cross a busy street, okay, can you imagine everyone? Are you all with me? Right, say imagine there is a busy street and there are a lot of vehicles coming from all sides and lot of people who are walking and vehicles and two-wheelers and four-wheelers and all of that. Okay, so now is there like if I want to cross the road from here to here, I can just directly straight quickly start walking and go and cross the street? No, what I need to do? First see left. First stop, then see left, okay, then see right. Then if anybody is still coming, tell them to wait or go to the zebra crossing, and then when the signal is red, that time I should cross the road. Otherwise, we'll meet with an accident. Is it right? Okay, so now when I have to cross a road also, I do an audit before crossing a road. Did I not do an audit before crossing the road? Yeah, so audit means what? You know, the word audit has been derived from the Latin word audere. Yes, all of you, there is one golden rule for our classes. The moment I start speaking, you have to stop speaking. Right? The moment I start speaking, you have to stop speaking. Not required for you. Okay. Right. So the word audit has been derived from the Latin word audere. Audere, which means to hear, to listen. So once upon a time, like centuries and centuries back, when this concept of audit started in the Greek and Latin government departments, in the Greek economy, in the Latin economy, in their government departments, this concept of audit started, wherein one person is doing the accounting. And now one person is doing the accounting. Can you rely on the accounting done by that one person? Can you rely? He might have done some fraud, he might have done some incorrect recording of the transaction, and that is why another person used to come and he used to listen. Right? Another person used to come and he used to listen whatever accounting was done. And after he used to listen to whatever accounting has been done, then he used to say, give an opinion saying that accounting is right or accounting is not right. Now today, yes. Now for today's day, it is not possible that, Infosys or Reliance Industries is preparing their accounts and you go and tell them, okay, tell me, I'm listening to what you are saying. Is it possible today to listen? Do you go over there and tell them, okay, tell me what accounting entries have you passed, how many sales have you made during the year, how many purchases have you made during the year? Is it possible? No, but then now the process of auditing has undergone a change. Now we have the auditing software, we have the different auditing standards and so, but the base is still the same, that accounting is done by one person and verification checking is done by another person. Right? That is the origin of the concept of the audit. Okay. Right, so now as this 100 marks theory subject over here, right? So you have accounts, which is like a practical subject over there, you have formulas, you have working notes over there, but audit is like theory subject. But in the theory subject also there are two relaxations for us over there. What are the two relaxations? One, there is 30 marks of MCQ. Right, there is 30 marks of the MCQ. Out of that, 10 MCQs are the direct MCQs, 1 mark each, and then other 10 MCQs are the integrated case study. They give you a case study and then 5 questions, again a case study and 5 questions and 2 marks each. Right, so that makes it how much? That is the 30 marks. Okay, right, so we have MCQ in our paper, which is for 30 marks, right, in which we have the 20 questions, 10 questions of 1 mark each, and 10 questions of 2 marks each. Is it clear? Right. Then apart from that, one more additional content which we have in the paper is the state whether the following statements are correct or incorrect. Right. In which they give you 8 questions. Out of the 8 questions, you have to answer any 7 questions, and each question is for 2 marks. So 7 into 2, 14 marks. Right. So 30 marks of the MCQ, 14 marks of the correct incorrect, 30 marks of the MCQ, then 14 marks of the correct incorrect, and then remaining 56 marks, right? Remaining 56 marks of your paper is the theory, is regarding where you have the descriptive type of answers wherein you need to write down the answers. Right, so whenever I study the subject of audit, I hope all of you are with me in the class. Beginning to end, everyone, good morning, every Suprabhatam. Is it a good morning for you already? Okay, right. So now what we are talking about here, okay, whenever we study anything in audit, any concept, any chapter, any term in audit, we have to look at it from 3 dimensions. What are the 3 dimensions we need to check? Okay, how an MCQ question can be asked on this one? What type of correct, incorrect question can be asked on this one? And third one, what is the theory question which could be asked on the same, right? So what is the MCQ, what is the correct, incorrect, and what is the theory question which could be asked on the same, right? This is the 3-dimensional study which we need to do, okay? Right, then apart from that, just as you know in accounts, right, to prepare accounts of a company, right, what have you studied in accounts apart from the chapters? I know you studied amalgamation, merger, those chapters, but you would have studied some standards in accounts. Yes, you not yet studied these standards. Okay, but at least can I assume that you know that there is something called as accounting standards? You know that? Oh my God, that's amazing. Not bad. Okay, that's wonderful. So you know there is something called as accounting standards. There is something called as Ind accounting standards. There is something called as international financial reporting standards. If the company is listed on the US stock exchange, then the company needs to prepare financial statements as per US GAAP. So that is US generally accepted accounting principles. What is GAAP? Generally accepted accounting principles. Okay. Right, then do you know something called as the financial statements? You'll say, ma'am, your expectations are so low from us. Yeah, so see, it's very easy. You know financial statements, right? And to prepare financial statements, you need to follow the accounting standards, the Indian accounting standards, the Schedule 3 and so. Okay, now can you tell me what all is included in the financial statements of an entity? What is included in the financial statements of a company? Balance sheet. Okay, such a beautiful name, no? Balance sheet. It can't go imbalanced. It has to be balanced. And assets and liabilities need to be balanced. Then after that, what is the next one? Oh my God, trial balance. Does it come in the financial statements? Oh, on the basis of the trial balance, you prepare the financial statements. But trial balance is not included in financial statements. Ledger is not included. Journal entry not included. Those are underlying books of account. Are you with me? Yes, everyone over there, are you all there in the class? Okay, right. So what is included next in the financial statements is the statement of the profit and loss account, right? The statement of profit or loss, okay, right? Then after that, the cash flow statement, right? The cash, cash flow statement. Then after that, some companies, they also need to include the statement of changes in equity. Right? No need to talk in the class. Listen to me. I'm talking to you about what is included in the financial statements. Balance sheet, statement of profit and loss, cash flow statement, statement of changes in equity, if applicable, not required that every company has to give a statement of changes in equity. If required by law, it would be required to give the statement of changes in equity. And in addition to this, what is also a part of the financial statements is the notes to account. But technically, though practically or very conveniently we call it as the notes to account, but technically it is known as the summary of significant accounting policies. So what is there in the notes to account is the summary of the significant accounting policies. Summary of the significant accounting policies and the other explanatory information. And the other explanatory information, which is nothing but your notes to account. But this is what is the name, summary of significant accounting policies. Okay, company, when you've recorded your inventory, when you have recorded your property, plant, equipment, fixed assets, when you've recorded your cash in bank, when you've recorded your revenue, what accounting policy have you followed for recognizing the transaction or recording of that transaction? That accounting policy has to be given in the financial statements. Are you understanding that accounting policy should be given in the notes to account and some other explanatory information, right? So what is it that I have discussed with you right now? Okay, what do you mean by the financial statements, or what all is included in the financial statements? What all is included? Balance sheet, statement of profit and loss, cash flow statement, statement of changes in equity, if applicable, then the summary of the significant accounting policies and the other explanatory information. Okay. Now, balance sheet. What does the balance sheet reflect? You see, balance sheet of a company, it has the assets and it has the non-current and the current assets, and then it has the equity, the other equity, and then you also have the liabilities of the company, non-current liabilities and the current liabilities. So balance sheet is always as at. Right? Balance sheet is always as at. So you prepare balance sheet as at 31st March, say just I am taking an example, 31st March 2025, right? So balance sheet as at 31st March 2025. So balance sheet reflects what? It shows the state of affairs. Okay, as on 31st of March, what was the state of affairs of the company? So what do you come to know by looking at the balance sheet of a company? You come to know what are the state of affairs. Okay, what is the state, condition of the affairs? Because the company is doing a lot of business. They are doing a lot of transaction. So what is the state of these transactions and activities and affairs of the company? That is the state of affairs. Every day you can prepare a balance sheet. I can prepare a balance sheet as at, say, 10th of April 2026. I can prepare a balance sheet on 15th of June 2027. Every day the assets of the company get depreciated. Every day there is a change in the inventory, purchase, sales of the company. So balance sheet is as at. Do you know that? Balance sheet. So what does balance sheet reflect? It reflects the state of affairs. Then you have the statement of profit and loss account. Statement of profit and loss for the year ended. How you write? Balance sheet as at, but profit and loss account, how you write down? For the year ended 31st March 2025. So that means statement of profit and loss shows the results of the entity for a particular period. Results, or it shows the profit or loss, or it shows the operating results of the entity for a particular period. Are you able to follow this, everyone? So what is reflected from the profit and loss account? The results of the entity, or the profit or loss of the entity, or the operating results of the entity, whatever you call it. Okay. Then you have the cash flow statement. What is reflected to the cash flow statement? The cash flows of the entity. What is reflected through the cash flow statement is the cash flows of the entity. And then the statement of changes in equity and the notes to account. But very important for us are the first three. What are the first three? Balance sheet, profit and loss, cash flow statement. What is reflected through the balance sheet is the State of affairs. What is reflected to the statement of profit and loss account is the results of the entity, and cash flow statement, what is reflected is the cash flows of the entity. Okay, this is what you mean by financial statements. And what I was telling you, that to prepare financial statements, because you know company needs to prepare, company, any entity which is doing any business activity or so, do they need to prepare their financial statements? Right, and to prepare their financial statements, they need to follow the accounting standards or the Ind accounting standards or the IFRS, whichever are the standards which are applicable to that company for preparing the financial statements. Are you listening to my words carefully? Right, for preparing the financial statements, they need to follow the accounting standards. Who is the they? The management, the company, right, the organization. Like say, if I look into Reliance Industries audit annual report, right, these are the financial statements of Reliance Industries, right? You look over here, it says independent audit report. So this is the report given by the auditor. Then you have the balance sheet, statement of profit and loss, statement of changes in equity, cash flow statement, and then the notes to the financial statement. I told you right now, summary of significant accounting policies and the other explanatory information. And then they also have consolidated. One is standalone and one is consolidated. Do you know these terms? As we've come here, we can just have a look. Right, see, now if Reliance, do you understand the term subsidiary? In which you have more than 51% equity? Okay, right. So if Reliance Industry, only their financial statements are being prepared, then that is standalone. Only parent company alone, holding company alone. But Reliance also has a lot of subsidiaries. Okay, so now if they prepare financial statements of themselves along with their subsidiaries, then that is referred to as the consolidated financial statements. Are you understanding that? So you have, in standalone, you will have state of affairs. In consolidated financial statements, you will have consolidated state of affairs. You understand? You will have the consolidated state of affairs, right? So standalone financial statements means what? Parent company, holding company alone, only itself. Whereas consolidated financial statements means parent company and the subsidiaries, associate, joint venture, all of them put together. Okay, right. So anyways, audit report, though we will come to it in a while. But right now, if I want to have a look over here, look, yes, at the balance sheet as at 31st March 2022. And here you have the assets, non-current assets, then the total non-current assets, current assets, equity, right? And then the total, and then the significant accounting policies and the accompanying notes to the financial statements, right? Do you want to see the magnificence of the numbers over here? What does it say? Property, plant, equipment of 2,23,824 crore. So 1, 2, 3, 4, 5, 6, 7. And obviously this is not going to be zeros over here. It is going to be some number over there, you know, 3, 4, 9, 1, 2, 6, 8 or something, which is rounded off to 223,834. Are you understanding that? It's not going to be at the end of in thousands over there or in crores of rupees over there. It is just the rounding off which has been done. Are you understanding that? Right, so such a big number, like 2,23,824 crore, that much of property, plant and equipment. Right, now for that property, plant, equipment, you need to check the PPE register. Then you also need to check the depreciation for all these assets and so. Okay, anyways, we'll come into all of those details, right? Then capital, work in progress, right? Then they have the cash and cash equivalent. So they have cash of 21,000 crore. No, it's a first year article. Generally, the work is given to a first year article is cash and bank. You take it in writing from me. You'll remember me on the day when you start your articleship. Ma'am had already told us, okay, the way first assignment, first article, first audit, what they will give you to check cash and bank. But now Reliance Industries, even though if they give me cash and bank, it's quite a task, no? Because 21,000 crore cash, I want to see whether the cash really exists. Do they really have 21,000 crore of cash and bank balances or no? Are you understanding that? So how to check that? And then they might be having some 700 bank accounts. And then you know bank reconciliation statement? Yes, Bal. Balance as per books and balance as per the, yes, balance as per books and balance as per the bank statement, passbook, and then add less items of reconciliation over there, and then direct entries, and then the checks deposited but not cleared, checks issued but not presented. So likewise, say if the company has 700 bank accounts, then 700 bank reconciliation statements. Life is so entertaining. First year article, no time even to take the nose up. Why? Busy checking cash and bank, day in, day out. His area of checking is the most biggest one. You understand? No, he is, what you say, into the ocean of cash and bank balances of the client over there. Then the client is having some foreign currency balances. Now foreign currency, their balances are in dollar, they are in euro, they are in yen. So now for these foreign currency balances, he has to check the conversion, the closing rate. The foreign exchange rates he needs to check for the same. Okay, right. So anyways, that is regarding the cash and bank, right? Then they also have the inventories of 45,000 crore, right? So that's a look at the balance sheet. And here, in case, if you see in case of Reliance Industries Limited, right? These are the signatures of the auditors, chartered accountants, and for DTS and Associates LLP. What is LLP? Limited Liability Partnership, and SRBC and Company LLP, chartered accountants, right? So if only one auditor would have been appointed to do the audit of financial statements, then it is known as a sole auditor, if only one auditor is appointed. But here is only one auditor appointed? No, there is more than one firm of auditor which has been appointed. So this is an instance of a joint audit, where more than one firm of auditor. So is only one CA doing the audit? One CA means one CA firm. Okay, now in one CA firm, can there be 4,000 chartered accountants working? Yes. In one CA firm, can there be 400 CAs or 4,000 chartered accountants working? Yes. But only one firm or one LLP is not doing the audit. More than one firm is appointed to do the audit, then that is referred to as the joint audit. So in case of Reliance Industries, what do they say? They have the joint audit of the, yes, they have appointed the joint auditors over there. Okay, right. Then you have the statement of changes in equity, profit and loss account, statement of profit and loss. Look at their revenue, income, value of sales, 4,63,067 crore. Right, so 463,067 and then 7 zeros after that, right? So 4,63,000 crore. And then income from services, other income. Oh my God, just so interesting, no? Other income is 13,000 crore. You understand? You keep an FD with the bank, and on that FD you get interest of 4,000, still you are happy. Oh, on my FD I got other income of 4,000 or so. Here they are getting other income of 13,000 crore. And other income, some FDs or something, some dividend income or something, 13,000 crore over there. Okay, right. And then cost of material consumed, changes in inventory, employee benefit, right? So all the employees working, how much salary are they paying them? Right, 5,000 crore, right? Then the depreciation, how much is depreciation charge? Because assets were how much? 3 lakh crore, no? 3 lakh plus crore. So 10,000 crore of the depreciation being charged for the year, right? Depreciation. And then after that you have the profit before tax and then the profit after tax. So profit before tax is 46,000 crore. Then profit for the year is 39,000 crore. And then you have the other comprehensive income. You may not be knowing this term so far. You'll come to know about it later. OCI, the other comprehensive income. And then you have the EPS. Do you know EPS? Earnings per share, right? Of face value of 10 each, right? So the earnings per share. Right, so anyways, this is the balance sheet and the profit and loss account. Are you able to see this? The balance sheet, and this is the statement of the profit and loss. Then after that you have the statement of changes in the equity. Then you have the statement of the cash flow. And then after that you have the notes to account. Okay, yes, are you getting a brief idea? And then see, in the notes to account, what is first part given over there? Accounting policies. Okay, what accounting policies have been followed by the management in the preparation of the financial statements? Okay, how have they valued their inventory? How they have done their revenue recognition? How they have charged the depreciation on the assets? Each and every accounting policy which has been followed by the management in the preparation of the Financial statements is given in the notes to account under the heading of the summary of significant accounting policies, right? So you have the summary of all the significant accounting policies given over there, right? So all these are accounting policies, and then after that you have the other explanatory information. Then you have the other information, like in a balance sheet. After have you studied final? No, you've not yet studied. I know that now. There's something called as a balance sheet, and to the balance sheet there are some schedules. Yes, there are some schedules to the balance sheet which are there. Okay, like again, if I go to Reliance Industries balance sheet over here, see, it says go to the notes to account, go to note number 1. Then it says for investments, go to note number 2. For loans, go to note number 3. For other financial assets, go to note number 4. Are you finding these references? I've again come to the balance sheet of Reliance Industries, right? So what is note 1 regarding? It is regarding the property, plant, equipment and the intangible assets. Property, plant, equipment and the intangible assets. So here if I come to the note 1, it is regarding the property, plant, equipment, capital work in progress, intangible assets and the intangible assets under the development. Okay, right? So that's the other explanatory information, right? So that's the other explanatory information. Then you also have the investments, right? Then you also have the capital, WIP, intangibles, and then the investments and so. Right, so anyways, what point I want to drive in over here is that do you understand the term financial statements? Okay, right, so now you might have noticed so far we have gone through 20-25 minutes of the class that I am doing some writing when I am discussing a particular concept or discussing something with you. Okay, if you just listen to me and if you just understand what I am talking about, after few days it will go away like air. You understand? Nothing will remain in your mind. You'll not be able to. I was checking whether you write on your own. But I realized nothing happens unless and until you tell them, "Arey, you need to write. What are you doing? Nicely, happily morning." Thank God that you came and sat over here at 7 o'clock in the morning. That itself, you've done a big favor to your parents and to the teacher. You understand? No, now that you've come here and you're sitting over here, now open your notebook. Then take out a pen from your compass box. Then after that, write down audits. Write down CA Inter, Auditing and Assurance, Group 2, 100 marks subject, 30 marks MCQ, 14 marks correct, incorrect, 56 marks theory. Arey, you will forget. You won't remember me after I go if you don't write. Do you understand? You need to write whatever I have been talking to you about. Start writing. Yes, everyone. What you will write? Yeah, you're preparing the index. Now they are writing the date, everything now they've started writing. But at least some good things. Some of you have got a new notebook for audit today. So that's nice. Write that, no, what is included in financial statements. Write that. Today it is day 1, that's why you're talking so much, or every day you will talk this much only? Day 1, warm up. Not required, no? But thank God, that I told that you need to write and everything. Otherwise, so you were happily, as if 3-hour movie in Inox and PVR, and sitting over there and remembering, and then what you'll write in the paper over there? Nothing. So what have you written so far? One thing I told you to write on your own, okay? 100 marks of the paper, 30 marks MCQ, 14 marks correct, incorrect, 56 marks theory, descriptive questions. That is one classification I want you to write. And then after that, you need to write down regarding the financial statements. Okay, what all is included in the financial statements. And how many colors I have used over here? Yellow, green, red, purple, blue, so many colors. That means what? From tomorrow, you need to bring the stationery. Or from the next class onwards, you need to have good stationery with you. Only one color pen, no, book will look so boring. No, colorful. Huh? So you'll be busy using different, no, not necessary. Ma'am is using blue color, so I should also use blue color. You use your own color, whichever color you want. Are you understanding that? But you need to use different colors for writing in the class, highlighting. Have you been given the textbooks? Where are they? वो तो निकाला ही नहीं. Textbooks, oh, this is the institute study material. But the one that has not. So they will provide. You need to get it collected from them. They will come. Okay, so ऐसा तो नहीं बोलता है. You should not say like that. ऐसा नहीं होता है. Okay, right. So all of you with me? Right. So for me, each and every student in the class is like a pearl in the ocean. You understand that? No, each one of you is very, very important and very, very special and precious for me. I don't like your friends at all. Okay, whosoever is in your friend in the class, I don't like your friends, I don't like anybody else. You should not be having any friends, anybody. It's only you and me who is there in the class, and we are having an amazing, wonderful discussion of audit. So I would like it to be better if you sit next to a person who is your enemy, whose face you don't like to see. You say, oh my God, where this person has come and sit in the class. Like that person you sit next to him. Because then it makes my job easy. You'll not chit chat then. And then you will not talk to that person in any case. Okay, right. And like first session of audit, we have a long way to go. 20 days I am here. We are going to have a roller coaster ride of the subject of audit. But on day one, our goal setting is very clear. On day one, our goal setting is very clear. That obviously we need to clear CA Intermediate, Group 1 and Group 2. So for that, we need to write both the groups together. Then if we want to write both the groups together, in each group we need to get 200, 200. So that we get 400 out of 800. What if I get 600 out of 800? What if I get 600 out of 800? Wonderful, no? Any problem? Too wonderful. Any problem with getting 600 out of 800 or 700 out of 800? No. 399 out of 800. Is it a problem? Yes. Big problem. 6 months problem? No. And first 6 months, then you go into the cycle, vicious cycle. Oh, it's like a vicious circle over there. May, November, May, November, May, November. Like that cycle keeps on going on. So you should not go into that cycle. One time go, come out. Immediately come out of the cycle. Are you understanding that? Right, so that means you need to get minimum 400 out of 800. That means in each subject you need to get minimum 40 and then minimum 50 also for the aggregate over there. So audit, again it being a theory subject, some students are very scared of theory subject, okay? Some are very good with practical and so, and some are very good with theory also. But whatever be the situation, at least our target in the class should be that each one of you should get 55 to 60, right? Obviously, I know many of you are going to get 70, 80 also, but I'm just taking an average out. Okay, these are the marks which we need to secure for the subject, and your work should be done in the class itself. You should be so attentive, you should have so much of conceptual clarity that you've gained in the class, that whatever is required, the marks required for the exams, you can fetch them very, very easily. And not to scare you on day one, but obviously I have to keep a fact sheet in front of you, that audit is quite a dangerous subject. Like, I'm not talking against my subject, I'm just telling you that it is a little bit of a challenging subject. It literally makes students cry at the, in case if you don't give the desired attention or the required preparation for that particular subject. Right? Otherwise, as I discuss with you the subject and as we discuss the entire audit process, I'm sure you'll fall in love with the subject. Like, you will enjoy the subject of audit over there. Okay, right. So now what does that mean? When I am writing, you need to keep on making some notes, doing some writing in the class over there. So that is one more benefit, you won't fall asleep. Because only listening, where Sahat Samadhi meditation, you never know. And easy life, meditation, didn't real. Then all of a sudden coming back and something, no. So when you're writing, you're busy, and then that's what happens, no? Then nothing goes in the air. You're able to recollect. Okay, right. So anyways, does everybody understand what you mean by financial statements? Okay, now and for a company, for the management to prepare the financial statements, they require to follow the accounting standards. Who has issued the accounting standards? Who has issued the accounting standards? Somebody is saying my uncle has issued. How can your uncle issue the accounting standards? Yes, ICAI, the Institute of Chartered Accountants of India. Ya Esha Supteshu Jagarti. Did you see the logo of ICAI? Below that it's written, Ya Esha Supteshu Jagarti. What does that mean? Ya Esha Supteshu Jagarti. When the world sleeps, we awake. Right? So when the entire world is sleeping, we are here to awaken the entire world, right? That is the logo of ICAI. Anyways, okay, right. So right now we are talking about the accounting standards. Now, what auditor has to do? Now see, there are many different types of audit, but right now I'm talking about one audit over here, which is the financial statement audit. Do you understand financial statements, everyone? Right, so right now, which audit? There are many types of audit. There is tax audit, there is internal audit, there's cost audit also, so many. But chartered accountant is not appointed for cost audit. But yeah, cost accountants are appointed for doing the cost audit. Okay, there are different types of audit. But right now, the audit which I'm talking with you about over here is the financial statement audit. Are you understanding that? Okay, and now who is going to prepare financial statements? The management. Now, audit of the financial statements, that is going to be done by the auditor. An auditor, for doing the audit of the financial statements, he needs to follow the standards on auditing. So rather than calling it auditing standards, they have put it in the reverse way, calling it as the SA, okay, standards on auditing. Right, so management, to prepare financial statements, you need to follow accounting standards. Auditor, for you to audit these financial statements, you need to follow the auditing standards. Auditing standards, they call it as the standards on auditing. Who has issued these standards on auditing? Yes, somebody is saying my auntie. No uncle, no auntie. Okay, it is the ICAI, the Institute of Chartered Accountants of India, has issued the auditing standards also. Are you understanding this, everyone? So to prepare financial statements, to prepare financial statements, accounting standards. To audit the financial statements, standards on auditing, or the auditing standard. Yes, it's the SA, standards on auditing. Okay, right? And now you need to keep writing with me. I won't be waiting. Like right now, I went on to the next slide, and probably you are yet writing something from the previous slide. So you need to, match that frequency with me regarding whatever I am writing. I won't be giving you a separate dedicated time over there. So you have to just find out the time and maintain a particular speed when we are writing in the class. Okay, right. So now over here, the ICAI is one, there is an International Federation of Accountants. What is IFAC? International Federation of Accountants. I'm just giving you a background. right? There is an international federation of accountants, because India has chartered accountants. Other countries also, would they be having their own chartered accountants? Like in America, the chartered accountant is called as the CPA, the Certified Public Accountant. So all these accountants of different countries coming together make the International Federation of the Accountants. Now ICAI is a member of the International Federation of Accountants. ICAI is one of the member of the International Federation of Accountants. Under the International Federation of Accountants, they have the International Auditing and Assurance Standard Board. Which board do they have over there? They have the International Auditing and Assurance, right? Auditing and Assurance Standard Board, right? International Auditing and Assurance Standard Board. Now, so just to make things little interesting for you, this International Auditing and Assurance Standard Board, it will issue the ISA. What is ISA? It will issue the International Standard on Auditing. Are you understanding that? It will issue the International Standard on Auditing. International, because it is issued by the International Auditing and Assurance Standard Board of the IFAC. Whereas ICAI has an Auditing and Assurance Standard Board. What does ICAI have? It has an AASB. What is AASB? Auditing and Assurance Standard Board. Right? Auditing and Assurance Standard Board. What is the name of your subject in CA Inter? Auditing and Assurance. Does it mean one and the same thing, auditing and assurance?
Auditing means checking, assurance means we are giving a confirmation that it is fine.
Yes, auditing and assurance, does it mean one and the same thing?
No, different.
Which is a broader term, audit or assurance? Assurance is a broader term. Audit is a type of assurance. Audit is one type of assurance. You understand that? And we are giving an assurance. What type of an assurance we give in an audit? I will come to that shortly. But it is auditing and assurance, right? So basically when you are doing a checking, you are doing assurance engagement. And one of the type of the assurance engagement is an audit engagement. One of the type of the assurance engagement is an audit engagement, right? So auditing and the Assurance Standard Board. Now this Auditing and Assurance Standard Board of the ICAI, are you all with me? This AASB of the ICAI has issued something called as the Engagement and Quality Control Standards, EQCS, Engagement and Quality Control Standards, EQCS. What do you mean by EQCS? Engagement and Quality Control Standards. Okay. Now, engagement. So, as a chartered accountant, are you all with me? As a chartered accountant, what are the type of engagements that you can perform? You can do an audit engagement, or you can do a review engagement. What is review? What is audit? Coming shortly. You understand? But as the chartered accountant, you get your membership number from the institute. What type of engagements you can perform? You can perform an audit engagement. You can perform a review engagement. You can perform an engagement which is other than audit or review. So that is referred to as the other assurance. Here I am only talking about more of the assurance engagement. Right, so other assurance, or apart from the assurance engagement, what you can also do is you can provide the related services, right? So in this engagement, they are talking about 4 types of engagement. What are the 4 types of engagement that they are talking about? Audit engagement, review engagement, assurance engagement, other than audit and review. That means other assurance engagement, and then you have the related services engagement. Are you all with me? Right, and now whenever auditor, you need to do the audit engagement, you need to follow the standards on auditing. Whenever chartered accountant, you have to do the review engagement, you need to follow the standards on the review engagement. Standards on, what is SRE? Standards on review engagement. Then whenever you have to do the assurance engagement, then you need to follow the standards on the assurance engagement. I hope each and every student in the class is with me. Right, and whenever you have to do the related services, you need to follow the SRS, that is the standards on the related services. The standards on the related services. And now, whether I am doing an audit or whether I am doing a review or whether I am doing an assurance engagement other than audit or review, or whether I am providing the related services, I always need to maintain quality in my work. I always need to maintain the quality in my work, and quality, for that we have one standard, which is the SQC. What is SQC? The standard on quality control. SQC is what? The standard on quality control. Right, so in total, what are the 5 types of standards I have mentioned over here? SA, SRE, SAE, SRS and the SQC. Are you getting the yellow color highlights? Right, so 4 types of engagement standards. What are the 4 types of engagement standards? SA, SRE, SAE and SRS. These are the 4 types of the engagement standard, and one standard we have is of the quality control. Whatever be the type of engagement you are performing, you always need to maintain the quality. Whatever be the type of engagement you are performing, you need to maintain the quality. Are you understanding that? So just to put it again over here, what are the 5 types of standards we are talking about? SA, SRE, SAE, SRS and then the SQC. Everybody with me? Who has issued these? The ICAI. Okay. Now, how many auditing standards have been issued by ICAI? 38 auditing standards. Right? 38 auditing standards. How many standards on review engagement have been issued? 2 standards on review engagement. How many standards on assurance engagement? 3. How many on the quality control, related services? 2. And how many on the quality control? 1, right? So what is the total coming to? Let me make you do some work in the morning. Yes, 46, right? So there are 46 engagement and quality control standards which have been issued by ICAI. 46 engagement and quality control standards which have been issued by ICAI. Are you understanding that? Okay, right. Now, out of these 30, in total the 46 standards over there, right? 3 standards are, 3 essays, standards on auditing are not applicable at CA final also and inter also, right? And then SRE, SAE, SRS is not there in your syllabus, but the introductory part regarding what is a review and assurance and all that, that will come later. That is there. But as such, is the standard applicable to you? No, standard is not applicable. SQC 1 is always applicable. Whether inter or final, SQC 1 is always applicable. Right, so apart from that, you have the 35 standards now. Right, so if you come to CA final audit, if I talk about CA final audit, we have 35 SA and 1 standard on quality control. So we have 36 standards which are applicable at CA final level, but at CA inter level, right? But at CA inter level, we have the 26 standards, right? So 9 standards on auditing are not applicable at the intermediate level and 1 standard on the quality control which is applicable at the intermediate level. So 26 standards on auditing and 1 standard on the quality control. So 27 standards which are applicable at the inter level, right? Okay. Yes. Yes, 27 standards which are applicable at the intermediate level. Out of the 27, how many are auditing standards? 26 are the auditing standards and 1 standard is the standard on the quality control. Is it clear to all of you? Right, so this, as you have accounting standards, AS1, AS2, AS3 and all of those. Here we have the SA, the standards on auditing. And standards on auditing is not SA1, SA2, SA3, it is SA200. And a first essay. So one class, I told the students that, let's begin with SA 200. So then they thought, oh my God, there are 200. And a ma'am has directly started with 200, but there are more 199. No, they have created a series, like one particular grouping, you know, okay, 500 series is for a particular set of auditing standards, 600 series is for a particular set of auditing standards and so. Right, so one part of your syllabus is what? These 27 standards, what I want to say. Let me summarize it again for all of you. What did I tell you? That ICAI has an Auditing and Assurance Standard Board. This Auditing and Assurance Standard Board has issued the Engagement and Quality Control Standards, which could be of 5 types: SA, SRE, SAE, SRS and the SQC, right? First 4 are the engagement standards and last one is the quality control standard. And at CA intermediate level, 26 standards on auditing and 1 standard on quality control is applicable. Are you able to follow this, everyone? Okay, and what are the numbers and names of these standards and all of that? We'll come to it later. And though they are saying that out of the 35 standards, you know, these 9 standards are not applicable at intermediate level, but there are still some standards out of these 9 standards also which we need to study, because without understanding those standards, we cannot understand the concept of audit. Right, so I don't know, just to show the greatness of art, they've said, okay, inter-student, so not applicable for you. But then you cannot understand only without understanding this. But so we'll just have a brief looking at those other standards over there. Okay, right, so did everybody understand that there is one term called as accounting standards and one term called as standards on auditing? Are you understanding? Accounting standards are to be followed for preparing the financial statements. Auditing standards are to be followed for auditing the financial statements. Is it clear to everybody? Right, so who follows the accounting standards? The management. Who follows the auditing standards? The chartered accountant or the auditor. He follows the auditing standards. So, but auditing standards technically are referred to as standards on auditing. So, when I say standards, no, it means engagement and quality control standards, which are of 5 types. But just to generally, standards means what? Auditing standards, because out of the 46, 38 are? Out of the total 46 engagement and quality control standards, 38 are the auditing standards only. So main is what over there? It is the auditing standards only. Okay, right. So that is one introduction to auditing standards, right? So if you look at the material, whenever it is given to you, no problem with it. So that's the tagline of the book. It's all about audit. Okay, and then what happens? Right, for what we have in this particular book over here, right, with the, if you check it, does it tally with the study material of ICAI? Yes, obviously the notes have been prepared keeping in mind the study material of the ICAI. But what we have over here, up to chapter number 10, if up to chapter number 9, if you see, we cover 17 standards in the first 9 chapters. We have total 27 standards, 26 standards on auditing, 1 standard on quality control. 17 standards we cover in the first 9 chapters, and then remaining 10, and we do it in the last chapter. Remaining 10, we do them in the last chapter. Are you seeing this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right, so these 10 we do it in the last chapter. So in total we have to study the 27 standards. 17 standards we will incorporate the study in our first 9 chapters only, and 10 standards we will study them in the last chapter. Are you understanding that? Okay, right. Then apart from that, if you look into each and every chapter, the chapter starts with the theory over there, introduction, objective and scope. I'll be starting with this shortly. Right, whatever are the relevant essays. We have interesting images also which have been added for your improving the the personal qualities of an auditor and so. Oh, look at this, such interesting ones. Right, we'll come to all of that. Okay, and then I want to come to the end. So correct, incorrect. You know, this book is flooded, means you will get exhausted. Like, you know, sometimes you like a particular sweet. No, you like I don't know which sweet, gulab jamun, does everybody know? Okay, right, so now if you don't know, then you can Google later on, okay, right, so now that's sweet. Now you like gulab jamun, but now how much to eat? 4, 5, 6, 7, A stomach limited capacity, no? If you expand, it will become so huge one day, then you have to roam with that big stomach everywhere, then weight loss, then so many other complications over there. So normally, and you have to eat for an entire life. Today is not the only day you have to eat. Some people eat as if today is the only day in their life they are going to eat. From tomorrow, there is going to be a drought, you know. Whereas no famine is going to be there, and a famine is going to be there. Nothing is going to be available. And then lazy people on earth. Okay, so anyways, like how much will you eat? How much ever you like gulab jamun, you'll eat 4, 5, you know, maximum 4, 5, 6, 7 or something like that. So, and then you will feel contented. Here, when it comes to the correct incorrect, you will say, oh my God, this is beyond of what I like, you know. It is like goes on and on. Every possible correct incorrect, which has been asked in the exam so far. Like in chapter 1 only, there are 30. So in all the chapters put together, there are some 500, 600, yes, correct, incorrect, all put together over there. Right, so many of the correct, incorrect over there. And then after that, you have the question and answers. Right, so if the question is from the RTP, do you understand? Revision test paper of the institute. Then it is written which RTP the question is from. If it has been asked in the exams, that means it is there in your suggested answers. You know suggested answers, everyone? Right, so if it is there in your suggested answers, then it is given 5 marks May 2018. That means it was asked in the May 2018 exam for 5 marks. Okay, so if it's in from the RTP, it is given RTP. If it is there from the suggested, it is given along with the marks. But if you see this question, there is nothing given in front of that. So that means either it could be an institute study material question, ISM question, institute study material question, or it could be a mock test paper question. MTP. You understand? Mock test paper 1 and 2, right? So either it could be a study material question or it could be a mock test paper question. For you, it is of no significance from where the question is coming. For you, what is important is what is the answer. You understand? No, for you, it is going to be relevant only when you're writing your May 25 attempt. You say, ma'am, why you're saying I'm writing May 25 attempt? I'm just considering as a possibility. You're writing your May 25 attempt, and in your May 25 attempt, this question comes. Then it is important for you. And otherwise, you know, oh yeah, see, this question is of this RTP. You know, I have observed every November they ask this question. They never ask this question in May. Or, you know, this question they never ask. Don't do any such analysis. It is useless. And already all possible analysis has been done and given to you over here. You understand? You just ignore. That is why that has been put in a smaller font size also. Now look at this. No, RTP, so interesting to see. May 15, November 19, 18, 17, 10, 14, 12, and so many, 14 and 13 and so. But anyways, that is not really very important for us. What is important is the question. So each chapter goes on with the same format, and then for MCQs, ICA has issued an integrated case scenario booklet, right? An integrated, some direct MCQs and some case scenario booklet over there. So wherever we have the relevant concept and the discussion, at that time I will include the discussion of the MCQs also, right? I'll also incorporate the discussions of the MCQ, right? So did you get a brief idea of the book also? Right, so did you get the type of questions asked by ICAI? Did you get the type of questions asked by ICAI? Yes. Did you understand what are the different type of standards which have been issued by ICAI? Yes. And do you know what is included in financial statements? Yes, is this all what we have discussed so far? Okay, what is included in financial statements? What are the different engagement and the quality control standards? What is in the auditing standards, right? Standards on auditing, and total 27 standards applicable for CA intermediate level. And then we've also seen the contents of the book, right? This is what we have done so far, right? And now with all this in the background, let us start with the definition of auditing. Let us now start with the definition of the auditing. What did I already tell you? That the word audit has been derived from the Latin word audere, which means to hear, to listen. Right? But today, practically impossible for auditor to hear and say whether the accounts are right or wrong. Okay, so now auditor, he follows the different audit procedures for the same. Right, so what is audit? You say, I'm doing an audit. Okay, now you know, no, audio, when you say audio CD, that means to listen. That is where the word audit comes from. Audiogram, audit is audio over there. Okay, now what is audit? When you say, oh, I am doing an audit, it is you're doing some type of a, when I checking, you're doing some type of a verification, you're doing some type of an examination. Are you understanding that? Okay, right. So let's take an example. There is a company, Growth Limited. Are you all with me? And the CA who is going to do the audit of Growth Limited is CA Sparkle. So this is just an example we will take in our entire class. Okay, what is the name of our chartered accountant? CA Sparkle. And which company or which entity he is doing the audit of? He is doing the audit of Growth Limited. Okay, now say Growth Limited has prepared its financial statements. Growth Limited, you know financial statements, everyone? Balance sheet, profit and loss, cash flow, statement of changes in equity and notes. Everybody, are you all with me? Yes, okay. So now Growth Limited has prepared its financial statements. Okay. Now Growth Limited say financial statements are showing a profit of 700 crore. Example, they are showing a profit of 700 crore. And Growth Limited wants a loan from the bank of say 500 crore. They want a loan from the bank of 500 crore. Okay, now when Growth Limited management will go to the bank saying that bank, you know management, those who run the organization. Okay, so now when they go to the bank asking the bank that bank please sanction a loan of 500 crore, bank is going to ask for the financial statements of Growth Limited. Bank is going to ask for the financial statements of Growth Limited, and then Growth Limited will submit these financial statements showing that see we have a yearly profit of 700 crore. Okay, but now yes, who has prepared these financial statements showing profit of 700 crore? The management of Growth Limited. Now, actually, in reality, what is the real state of affairs of the company? In reality, what is the real state of affairs of the company? Actually, the company has a loss of 1200 crore. What is the true financial position of the company? True results of the company, it has a loss of 1200 crore. You know that if I tell the bank that I have a loss of 1200 crore, will the bank give me a loan? Will the bank give the company a loan? No. So that is why what the management does, it manipulates the financial statements. It does the window dressing. What is window dressing? You are doing the manipulation. You are doing the fraud in the accounting statements of the company. You are not showing the true state of affairs. You are showing the false state of affairs. Do you remember state of affairs? Balance sheet. You're not showing the true state of affairs. You're showing the false state of affairs. And then what does it say? So they show a profit of 700 crore and they go to the bank and they say, bank, we want a loan of 500 crore. Bank says, please show us your financial statements. They say, see, this is it. We have yearly profit of 700 crore. So you think bank should be ready to give them a loan? No, bank will say, no, who prepared these financial statements? They say, we have prepared. They say, who has checked them? They say, nobody has checked them. So see, or bank says, go back. You know, get these financial statements checked. So what they do, this Growth Limited, they have an employee. Yes, they have an employee, or the management of Growth Limited, they have some relative. Okay, and now from this employee or relative, say example, who is a chartered accountant. They get the financial statements audited and they get an audit report from him. Now employee, your person. So if you tell him show profit of 700 crore, he will agree. He will say, yeah, profit of 700 crore. Your relative, you tell them that, please, we want to show profit of 700 crore, agree. Are you understanding? So now, is that person a chartered accountant? Yes. But is he an auditor? Yes. But is he an independent auditor? No. Is he an independent auditor? No. So the definition of audit starts with audit is an independent examination. So why I told you this entire story is for the word independent. Audit is an independent examination. You understand? If the person who is preparing the financial statements, Yes, the person who is preparing the financial statements and the person who is auditing the financial statements, if it is maker checker, if they are same, then obviously can you rely on such financial statements? No, it has to be an independent examination. Right? Do you understand independence? That is not coming under the influence of anybody, not making your decision making subordinate to the wishes or directions of another. So audit is what? It is an independent examination of what? Of financial information. Audit is an independent examination of what? Of what are you doing the examination? Of the financial information. Of who? Of any entity. Of any entity, whether profit oriented or not. Whether profit oriented or not, irrespective of its size or legal form. Irrespective of its size or legal form. When such an examination is conducted with a view to express an opinion thereon. When such an examination is conducted with a view to express an opinion thereon. Right? So audit is an independent examination of financial information of any entity. And why such examination is conducted? With a view to express an opinion thereon. Express an opinion on what? Financial information. You're doing examination of the financial information. Financial information comes from the financial statements. Have we already discussed financial statements, everyone? Right? So audit is an independent examination of financial statements, financial information, means one and the same thing, of any entity. So can I be doing the audit of a company which is a profit-making company or a Section 8 company? Do you know Section 8 company? Yes, not for profit company. Okay. So can it be a profit-oriented company or not? Yes, the entity whose audit I am doing. Is it necessary that only profit-making companies you can do audit, non-profit-making companies you cannot do audit? No, you can be doing the audit of any company, whether profit-oriented or not, irrespective of its size. So it could be a company having a turnover of 1 crore, or it could be a company having a turnover of 4 lakh crore. Like in case of Reliance Industries Limited, what was the turnover of the company? 4 lakh crore. But can a company have a turnover of 1 crore also? Entity, can it have a turnover of 50 lakh also? Yes, irrespective of its size or legal form. So is it necessary that you only do the audit of a company? No, you could also be doing the audit of an LLP. You can also be doing the audit of an individual. You could also be doing the audit of an association of persons, or you could be doing the audit of the partnership firms. Are you understanding that? Or you could be doing the audit of the Hindu undivided family. Or company, it could be a private company, it could be a listed company, it could be a foreign company, yes, it could be a government company, any type of entity it could be. Are you understanding? So what does it say? Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. So doesn't matter what is the size of the company, doesn't matter what is the legal form of the entity, doesn't matter whether it is a profit oriented entity or a not for profit company. But why such examination is conducted? When such an examination is conducted with a view to express an opinion thereon. So why are we doing the independent examination? To express an opinion. Is it clear to everyone? To express an opinion. Okay. Right, so now to express, so independence of the auditor, we are going to discuss a separate short note on independence of the auditor later on. Right now, have we finished discussing financial information? Yes, financial information have we already discussed. Entity also have we already discussed. Okay. Now express an opinion, right? What auditor needs to do after doing the independent examination? You have to express an opinion. As simple as, like say there are some guests coming to your place and there is some special food being prepared. Just as an example. And now because the guests are coming, now every day normally your mother won't tell you, you know, that you taste the food, whether it is proper or something. But when guests are coming, you know, some special food is prepared which is not prepared every day or so. And then you will be told, you know, that just taste, you know, whether the salt is proper or whether the spice is proper or something like that. And then after tasting it, you express an opinion. Audit. And next time you say, Mummy, wait, I'll audit your food. So, you understand? Then you will express an opinion. No, little salt needs to be added. Or most of the boys, they will say, something is wrong. I don't know what is wrong. But something is problem, you know, I don't know. Then your mom asks, is salt okay? No, I think salt is okay, but something is wrong. They'll confuse. They can't tell you, know, okay, exactly what is it. But yeah, do you understand? Right, so to express an opinion, what you said, oh wow, the food is so yummy, the food is so tasty. Oh no, it's not come out well, you know, the vegetable is not tasting good. So do you use some words to express your views regarding the food? You understand? You see a movie. And after you see the movie, okay, then the reviews of the movie which come on. And again, there are some stars also which are given to the movies, 5 star, 4.5 stars, or you know, some movies they get half star only. You understand? No, so like in a 3 star or half star, my God, oh my God. So, you know, and then they say, oh, it is worth a watch, or it's a waste of money, or you know, it is a waste of time and same story and everything. Right? So there is a review, there is an opinion which is expressed regarding how the movie is after watching the movie. Are you understanding? So there also to express the opinion, do you require certain words? So wherever you have to express an opinion, do you require words to express an opinion? Yes. So now in an audit, when you have to express an opinion, listen to me very, very carefully. In an audit, after you finish doing the independent examination, when you have to express an opinion, to express the opinion, the phrase, the term which is used by the auditor is true and fair. The phrase, the term which is used by the auditor to express an opinion is that whether these financial statements are they true and fair or not. Are you understanding that? Let us come to Reliance Industries audit report. Though we don't know the entire audit report, don't worry. Yes, everything we'll come to know as the time comes. But right now, see over here. Independent auditor's report. Oh my God. Because what does it say? Your employee relative, can he be doing the audit? No, he will not be independent. Are you with me? Yes, how many of you think I'm discussing the auditing standards right now? No, I'm not talking. Auditing standard discussion is over. You know that? वो discussion करके हो गया है. Now what are we discussing? Right, we are discussing the definition of audit. In the definition, you have to do a reality check with yourself. Where, what is happening? Be aware. You understand? No? Okay, right? So now, what does it say? Express an opinion. To express an opinion, what phrase is used by the auditor? True and fair. So here, see, auditor is saying, we have audited. Obviously, you have to audit only, then you can say. And then in our opinion, so see, this is express an opinion. So auditor is saying, in our opinion. Why our? Not why? Not my opinion? Because it's joint audit, no? And more than more than auditors are coming together. And to the best of our information and according to the explanation given to us, and even though if it is sole auditor, it's not one auditor who will do the audit, no? The entire firm put together will do the audit. The aforesaid standalone financial statements give the information required by the Act, by the Companies Act in the manner so required, and give a true and fair view. give a true and fair view in conformity with the accounting principles generally accepted in India. Means what? Generally accepted accounting principles, है ना? Accounting principles generally accepted in India means what? Generally accepted accounting principles of the of the state of affairs means they are telling balance sheet of the company as at 31st March 2022, its profit. Statement of profit and loss including the OCI, its cash flows. That means they are talking about the cash flow statement and the changes in equity. That means the SOCE, the statement of changes in equity for the year ended on that date. Everybody, are you able to follow this paragraph over here? I've opened Reliance Industries audit report. We'll see the contents of report and everything. That will come. But right now, what definition of audit we are studying over there? Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form, when such an examination is conducted with a view to express an opinion thereon. And what is the phrase used by the auditor to express an opinion? True and fair view. Is it clear to everyone? Once upon a time, like this is dinosaur concept, okay, now it has no relevance in today's time. Once, like dinosaur, you just imagine how old it is. Okay, once upon a time, the phrase used by the auditor to express an opinion used to be true and correct. Okay, but now this is no longer in use at all. Like true and correct, like say cost of the asset of the company 1 lakh. Cost of the asset 1 lakh, rate of depreciation 20%. Right, so 1 lakh into 20%, 20,000. Okay, auditor used to say 1 lakh into 20% on the calculator, check 1 lakh into 20%, 20,000, say correct, true and correct. Here the focus of the auditor is only on the mathematical accuracy of the books of account. Whereas today when I am doing an audit, will I check 1 lakh into 20% mathematical accuracy? Yes, I will check mathematical accuracy, but in addition to that, I will also check the cost of the asset, whether all the incidental expenses have they been added to the cost of the asset. I will also check the rate of depreciation. I will also check whether the asset is in the name of the entity. I will also check whether any loan has been taken against this asset. I will also check whether the Ind AS 16, Ind AS 16 is property plant equipment, or the AS 10 for property plant equipment has it been complied with. Are you understanding? So I don't just stop by checking 1 lakh into 20%, 20,000 and true and correct. That is just checking, maths, mathematical accuracy of the books of account. That used to be the role once upon a time. Were you bothered about how this 1 lakh came? No. Were you bothered about how this 20% has come? No. Your mind is only saying one thing. 1 lakh into 20%, 20,000. Right. So today, will that be enough for the auditor? Okay, client is saying that, see auditor, these are our fixed assets of 1 crore and rate of depreciation is 10%. So 10 lakh is the depreciation. Will you say, okay, true and fair? No. No. Is it possible? No, we will have to check the assets, we'll have to check the rate of depreciation, and then, will I also check the mathematical accuracy? Yes, but do I just stop with mathematical accuracy? No, I go much beyond that. Are you understanding that? I go much beyond that, right? So that is true and fair view, right? So true and fair, right? So fair means what? Reasonable. True and fair means you get like excellent, good, fair, that type of, grading is there in the schools, no? Like A plus is what? Excellent. Then you have, yes, good over there, right? Then you have the, yes, fair over there, or below average, something like that. You have the ratings over here, right? So your auditor is saying what? True, it is true and it is fair. So we are not saying it is excellent view, or we are not saying it is the best view or the good view. What we are saying, it is fair view. True and fair view of the financial statements. Are you able to follow this, everyone? Okay, right. Now, say an Indian company, are you listening to me, everyone? Yes, Indian company is preparing its financial statements. It will prepare its financial statements as per AS or Ind AS, whatever is applicable, so that you take it at that. Yes, Ind AS or AS plus Schedule 3 to the Companies Act. Schedule 3. You know Schedule 3? What is Schedule 3? Balance sheet. Why? What did profit and loss account do to you? Why only balance sheet? Vertical format, okay. Where is Schedule 3 given? Very good. Companies Act 2013. Right? Companies Act 2013. A schedule, okay. Is it of the act or is it to the act? You say section 139 of the Companies Act 2013. Am I right? Section 139 of the Companies Act 2013. But Schedule 3 to the Companies Act. Why? Because it is given after the act. Right? So Schedule 3. And what is Schedule 3? It is the format of the financial statements. What is Schedule 3? It gives the format of the financial statements. Okay, right. So if an Indian company prepares financial statements as per the Ind AS and as per the Schedule 3, right? Or say if that Indian company, it is listed on the National Stock Exchange also. It is listed on the NSE, BSE, National Stock Exchange, and the Bombay Stock Exchange, and it is also listed on the US Stock Exchange. That is, it is also listed on the NASDAQ. Are you understanding that? It is also listed on the NASDAQ. Right, so it is regulated by the SEBI, Securities Exchange Board of India, and it will also be regulated by the SEC, the Securities Exchange Commission. So simple example, if I take of Infosys. Infosys, is it listed in India? Yes. Is it listed on the US Stock Exchange also? Yes, it is listed on the US Stock Exchange also. Are you getting that? Okay. Now, to this Infosys, will it have to submit its financial statements to SEBI? Yes. Will it have to submit its financial statements to the Securities Exchange Commission also? Yes. Now, to Securities Exchange Commission, can they submit their Indian GAAP financial statements? To Securities Exchange Commission, can they submit their Indian GAAP financial Indian GAAP, you understand? Yes. Accounting Standard Schedule 3 or Ind AS Schedule 3? Yes. Can they submit Indian GAAP financial statements to US Stock Exchange authorities? No, in that case they will have to submit the US GAAP financial statements. Say it is listed in UK. Then they will have to submit as per the UK GAAP, and submit the financial statements prepared as per the UK GAAP. Are you understanding that over here? Now see over here, we have audited the consolidated balance sheet of Infosys Limited. Are you with me? And its subsidiaries. That means we are talking about consolidated. Did I talk to you about the term standalone and consolidated? Okay, right. And its cash flows for each of the 3 years. And we audited as per these reports. And then right, our opinion, we audited for each of the years the group's financial statements based on the certain criteria and express an unqualified opinion. Right, just a moment. Right, the basis for opinion, and we have audited over here. Right, it says the international financial reporting standards, the Ind AS, the company maintained these systems, the report of the management, we have audited. In our opinion, yes, the consolidated financial statements, are you all with me? In our opinion, the consolidated financial statements present fairly. Right, so what present fairly? That means what? For true and fair view, we have one more option of the phrase over there, which is present fairly. But what is very popular in India, what I had shown you in case of Reliance Industries was true and fair view. But do you have two alternatives for expressing an opinion? Yes, either you can say true and fair view, or you can say that they present fairly. Right? It's true and fair view, or you can say that they present fairly. Are you understanding that? And then what does it say? These financial statements, opinion, and then after that revenue recognition and all of over there. Right? These financial statements have been prepared by the management. How they have prepared the financial statements in conformity with the IFRS. Are you seeing International Financial Reporting Standards as determined by the International Accounting Standard Boards? International Accounting Standards Board. Are you understanding? So they have not followed the Indian GAAP. They have followed the IFRS. And there also what auditor opinion is expressing? True and fair view. But what is an alternative term for true and fair view? Present fairly. Okay. Right. This would be in case of a general purpose framework. Now let me give you one more example. See, I'll make things more. We'll try to get a better understanding of things. Now over here again it says independent auditors report. And to the board of directors. Report on the audit of the special purpose financial statement. So one we have, what we can understand is the general purpose financial statements. One what we could have is the general purpose financial statements, like right now what we saw, US Stock Exchange Authorities or the Indian Stock Exchange Authority. And second we can have is the special purpose financial statements. Okay, right. We have audited the accompanying special purpose financial statements of Bharti Airtel UK Limited, which comprise the balance sheet, statement of profit and loss, statement of changes in equity, cash flows, and a summary of significant accounting policies. In our opinion and to the best of our information and according to the explanations given to us, the aforesaid special purpose financial statements is prepared in all material respects in accordance with the basis set out in the note number 2.1 of the standalone or to the what you say special purpose financial statement. So that means what I have come to know, okay, in order to express an opinion, 99.99% of the time the auditor will use the phrase true and fair view or present fairly. However, there is a possibility that in case of the special purpose financial statements, the auditor will not use the phrase true and fair, but he will use the phrase prepared. Right? So these are the terms used by the auditor to express an opinion. Right, so general purpose financial statements and the special purpose financial statements. Are you understanding? General purpose means what? They are meant for a broad range of users, common set of users. And special purpose, that means they are meant for a specific set of users. General purpose financial statements means what? Which are meant for a common range of users, which are meant for a broad range of users. And special purpose financial statements means they are meant only for a specific set of users, only for a specific purpose. You know, ICAI has also issued the SA 800, 805 and 810. Did I tell you about SA? Did I tell you about SA? Standards on auditing. Right, so just quickly, if I want to give you a better understanding of this, right, I'll just open one file over here. Right, so if I open this list over here, this is the list given of all the 46 standards. Do you know the 46 standards, everyone? 46 standards you forgot? Yeah, you forgot? You forgot 46 standards, engagement and quality control standard, 38 standards on auditing, 2 standards on review engagement, 3 standards on assurance engagement, 2 on related services, 1 on quality control. You remember that? Okay, so in that standards on auditing, you have this SA 800, 805 and 810. Look at the title of SA 800. What is it? Special considerations, audits of financial statements prepared in accordance with a special purpose framework. So in this case, what phrase will be used by the auditor to express an opinion? Prepared. Are you understanding that? That is for the special purpose framework. Anyways, this is not applicable for inter also and final also. But I'm just telling you that this is the special purpose framework, special purpose financial statements. And otherwise, all these auditing standards that we are talking about are for the general purpose financial statements. They are the general purpose financial statements. Okay, right. So what is the definition of audit? Audit is an independent examination of financial information of any entity, whether profit oriented or not, irrespective of its size or legal form. When such an examination is conducted with a view to express an opinion thereon. And what phrase is used by the auditor to express an opinion? True and fair view or present fairly, but in some rare circumstances it could also be the prepared, wherein you cannot say fair but you just say that they have been prepared. Okay, right. So over here, if you see prepared, what does it say? Say, go to note number 2.1. Right, so note number 2.1, if I come to the note over here, right, 2.1, the special purpose financial statements have been prepared by the company solely to assist for the consolidation purpose and to comply with the requirements of the Companies Act. These financial statements have been prepared to comply in all material respects with the Ind AS. Right, so it is which company? It is a UK based company, and now UK based company is preparing financial statements as per the Ind AS. Are you understanding? So it is a special purpose financial statement. Whereas in case of Reliance Industries Limited, what did it say over here? Okay, how they are preparing the financial statements? Right, if I come to the management's responsibility paragraph, what does it say? They are preparing the financial statements as per the Ind AS specified under section 133. Right, so this is general purpose financial statements. Okay, right, so with a view to express an opinion thereon. Okay, now true and fair view. So now mainly auditor, what he has to do, he has to express an opinion on the true and fair view. So say you have been appointed as an auditor of a company and you have to express an opinion on the true and fair view. So say these are the financial statements given to you for audit. What do you mean by financial statements? Balance sheet, profit and loss, cash flow statement, statement of changes in equity and the notes. Okay, these financial statements have been given to you for audit and you have been told, okay, do the audit and express an opinion, true and fair or not. So now you have a doubt, okay, exactly what do I need to check in order to express an opinion on the true and fair view, right? So first 3 points which we have over there are regarding the assets. Right, say, so what does it say for the asset of the company? Say assets of the company are 100 crore. Now, what does it say? Say actually the assets of the company are 100 crore, what they have shown over here, but the real value of the assets is say 120 crore, or the real value of the assets is say 80 crore. Then will this 100 crore give a true and fair view? No, so assets should neither be undervalued or overvalued. Assets should neither be undervalued or overvalued. Are you understanding? What is the real value of the asset? 100 crore. It should not be shown as 120 crore overvalued. It should not be undervalued. You understand? No, company has a building. The value of that building is 10 crore. So at what price it should be shown in the books of account in the balance sheet? 10 crore. Should it be shown at 20 crore? No. Should it be shown at 2 crore? No. It should be shown at 10 crore. Assets are neither undervalued or overvalued. Are you understanding that? Then company has 700 bank accounts. So in the balance sheet, how many bank accounts should be reflected? 700 bank accounts. What is happening? Only 500 bank accounts are reflected. 200 bank accounts they have not included only. Right? So will it give a true and fair view? No. So no material asset has been omitted. So no material asset should be omitted. So assets are neither undervalued or overvalued, then no material asset is omitted. Then say against that building of 10 crore, you have taken a loan of 5 crore. Can I take a loan against the building of the company? Can I take a loan against the building of the company? Say you can give it as a mortgage, no? You can mortgage it with the bank, financial institution and take a loan. So one, against this building I have not taken any loan. That means it is free of any charge. Okay, but against this building, if I have taken a loan, then should it be reflected in my financial statements that it has been given as a security for a particular loan taken? Yes, otherwise it will not give a true and fair view. So any material charge created against the company's asset should be separately disclosed. Any charge created on the company asset should be disclosed. Otherwise it will not give a true and fair view. Otherwise everybody will think that, oh, this building is in my name and I have not taken any loan against this building. So yes, building is in my name, but I have taken a loan of 5 crore against this building. That has to be shown in the financial statements, right? So 3 points over there we have are regarding the assets. Are you understanding that? What are the 3 points regarding the assets? Assets are neither undervalued or overvalued. Then no material asset is omitted. Then what does it say? Any charge created on the assets are disclosed. Are you understanding? I've come to 1.3 over here, concept of true and fair. It is a fundamental concept in auditing. The phrase true and fair, just see if you understand this sentence. The phrase true and fair in the audit report signifies that the auditor is required to express his opinion as to whether the state of affairs means what? Balance sheet, and the results statement of profit and loss of the entity as ascertained by him in the course of audit are truly and fairly represented in the accounts under the audit. Right, so true and fair view. What constitutes true and fair view is a matter of the auditor's judgment in the particular circumstances of the case, and in more specific terms, to ensure true and fair view, an auditor has to see that assets are neither undervalued or overvalued. No material asset is omitted. Any charge created against the company asset should be separately disclosed. Then liability should not be omitted. So one, they are talking about the assets, then they are talking about the liabilities, right? Say company has a tax liability of 700 crore and they have not recorded only that tax liability. Will it give a true and fair view? No. Will the financial statements give a true and fair view? No. So no material liabilities have been omitted. Right. Then what does it say? The balance sheet and profit and loss account disclose all the matters which are required to be disclosed. That means Schedule 3 disclosures have been given. In more simple language, what I can say, whether the Schedule 3 format, you know Schedule 3 everyone, right? Schedule 3 format for preparation of financial statement, Schedule 3 to the Companies Act 2013. So whether all the disclosures have been given. Then all accounting policies have been consistently followed. Yes, you know the methods for valuation of inventory? AS2, very good. AS2, Ind AS2. What are the methods for valuation? FIFO or weighted average. LIFO is not allowed as per AS2. Are you understanding that? So last year company was following FIFO. This year also company is following FIFO. So is there consistent application of accounting policy? Yes. But say last year company was following FIFO. This year they changed to weighted average method. Is there consistent application of accounting policy? No. They have to do the retrospective change and a retrospective effect of change in accounting policy. So you have to check whether accounting policies have been consistently applied, and in case if there is a change in accounting policy, it should be done with retrospective. You understand retrospective? Okay, from day one, had I followed this policy, what would have been the accounting effect? Right, so what is the next point over there? To check whether accounting policies have been consistently followed. Like see, you know, I'll give you a simple example over here. Right, I'll give you a simple example over here. Right, 2025 previous year and say this year 2026. Last year company was using FIFO method for valuation of inventory and the inventory valuation came to 20 crore. Example. This year the company is again using FIFO method for valuation of inventory and the inventory value is 22 crore. Can I compare these two balances? Can I compare these two balances? Yes. But say last year the company was using FIFO method and the inventory valuation came to 20 crore. This year the company changed to weighted average and the inventory valuation is coming to 23 crore. Can I compare these two balances? No, because accounting policies have not been consistently applied. Are you understanding that? So in order to give a true and fair view, the everywhere, what am I again coming up to ultimately? Whether the accounting policies give a true, whether the financial statements give a true and fair view. Right, so to check whether the accounting policies have been consistently applied. Okay, and say during the year in the company a fire occurred. And during the year in the company factory or godown or warehouse, a fire occurred over there, and a company suffered a loss of 200 crore, loss on fire. And the company suffered a loss of 200 crore. Can it show it as two miscellaneous expenses to 200 crore? You'll wonder, no, what have they done? Miscellaneous expenses of 200 crore about. Are you understanding that? So what does it say? All unusual, exceptional, non-recurring items, have they been disclosed separately? All unusual, exceptional, non-recurring items, have they been disclosed separately? So in order to express an opinion on the true and fair view, what will you check? One, assets are neither undervalued or overvalued. No material asset is omitted. Any charge created against the asset is disclosed. Liabilities are not omitted. Balance sheet and profit and loss account disclose all the matters. Then accounting policies have been consistently applied, and unusual, exceptional, non-recurring items have been disclosed separately. These are the points which the auditor needs to check in order to express an opinion on the true and fair view. And what is true and fair view? It is the phrase used by the auditor to express an opinion. What is the alternative phrase? Present fairly. And in special purpose financial statements, we could express an opinion saying prepared also. Is it clear to everyone so far? Okay, right. So now let's proceed further, right? Let's look into, so I have discussed 1.3 with you. Now let's come to 1.1. Okay, what is the definition of audit, right? So our auditor to so skeptical, magnifying glass only, like this. Okay, right. Audit is an independent examination of financial information of any entity, whether profit oriented or not, and irrespective of its size or the legal form, when such an examination is conducted with a view to expressing an opinion thereon. Are you understanding that? Okay, what did I say? In case of Growth Limited, what financial statements management had prepared? Financial statements which showed a profit of 700 crore. What was the reality? Right? What was the reality? Had they correctly prepared the financial statements, there was a loss of the 1200 crore. Now with these financial statements, if they go to the bank asking the bank for a loan, will the bank sanction the loan based on these profit of 700 crore? If they profit of 700 crore, if these financial statements the company submits to the bank, will the bank give them a loan? Yes, because if they submit these financial statements, but that's why we said, no, okay, no, that is why we are not going to allow these financial statements to be submitted. We will get them audited from a chartered accountant. He will check whether this profit of 700 crore is it genuine or not, and only then auditor giving report, and then bank will rely. Otherwise bank will not rely only on these accounts. Are you understanding that? Otherwise bank will not rely only on these accounts. Okay, so now over here, what does it say? These financial statements, are they misleading? Are they leading or are they misleading? They are misleading. Are they honest or are they not honest? No, they are not honest. They are misleading. And how should accounts of a company be? They should be honest. They should not be misleading. Are you understanding that? Financial statements of a company, financial information of a company, how it should be? Should it be honest or dishonest? It should be honest. Should it be leading or misleading? Right? It should be leading. It should not be misleading. Okay. Now, when would I say that the accounts of the company are honest and that they are not misleading? And accounts means financial statements of a company. When would I say that they are honest and they are not misleading? Okay, now financial statements are prepared on the basis of the, what is there in financial statements? Balance sheet. Example, balance sheet, the numbers come from the schedule. In schedule, they come from the trial balance. And TB, you know TB? Trial balance. Okay, everybody, are you with me? In trial balance, where do the numbers come from? Ledger. The ledger, where do they come from? The books of the prime entry, that is the journal entry, and in the journal entry they come from the supporting documents and the underlying vouchers and documents over there. Are you understanding that? Okay, right. So now what does it say? So this is the prime entries which have been passed in the books of account. Right, so now whatever amounts are shown in the financial statements, they should be with reference to the entries in the books of account. Right, do you understand the term books of account? Yes, books of account. Right, books of account of a company, that is the accounting books of a company. Right, so now to prepare financial statements, should a company make use of its books of account? To prepare financial statements, should a company, you know financial statements, right? So to prepare financial statements, should a company prepare its books of account? Oh, you know, but many management and many company and many auditors, they don't require books of account to prepare financial statements. They have pure simple two questions. Tell me two things. How much tax you want to pay and how much profit you want to show. This much you tell me, I will prepare and give it to you. You don't worry. You understand? They say do books of account and all, you keep it. I don't require all that. You keep it with you. How much tax you want to pay? Say your tax liability is coming to 20 crore. You say, I don't want to pay 20 crore tax. I want to pay only 5 crore tax. Immediately what expense? Petrol, hotel, traveling, conveyance expenditure, all miscellaneous expenditure, everything increased over there. Okay. Are you understanding that? So will such books of financial statements give a true and fair view? Will they be honest? Will they be leading? No, they will be misleading. Okay, they will be misleading. So the person conducting this process should perform his work with knowledge of the use of accounting statements and take particular care to ensure that nothing contained in the statements will ordinarily mislead anybody, and this he can do honestly by satisfying himself that the accounts have been drawn up with reference to the entries in the books of account. Yes, this is a question which has been asked in your like it's there in the question bank, right? So if I want to show you the same question in the question bank, right? So just because we are beginning right now, so here over here, this RTP May 20, and I showed you this one, no? Number 15. The person conducting audit should take care to ensure that financial statements would not mislead anybody. Explain stating clearly the meaning of auditing. Or audit, they have given the definition and what the auditor is supposed to do to satisfy himself that nothing contained in these statements will mislead anybody. Right, so that is the question, the answer to which we are discussing right now. Are you all with me, everyone? Yes, everyone, all of you in the class, you know what we are talking about? Okay, right, so this is the question that we are discussing. So what is point number 1? That accounts have been drawn with reference to the entries in the books of account, and should not happen that, I don't require books of account to prepare financial statements. Will such financial statements be giving a true and fair view? No. So accounts should be drawn with reference to the entries in the books of account. Now, the entries in the books of account should be supported by the underlying documents. Now, again, the entry, what you say, okay, I'm preparing as per the books of account, but books of account all bogus entry. Oh my God. You're saying, no, books of account. You say, no, ma'am, ma'am is telling, don't prepare financial statements on your own, prepare as per books of account. So now I'm preparing as per books of account, but books of account, full bogus entry. And all bogus traveling expenses, bogus commission, bogus salary being paid, all fake expenses being recorded. Now again, will they give a true and fair view? No. So what does it say? Whether the entries in the books of account, are you getting entries in the books of account? Then entries in the books of account, are they adequately supported by the underlying papers and documents and by the other evidences? Okay, right. Then what does it say? In the books of account, how many purchase entries are there? Say example, there are 30 purchase entries. In the books of account, how many purchase, and I'm just taking an example of purchase. In the books of account, how many purchase entries are there? Say 30 purchase entries. Okay, so now in the financial statements also, how many purchases should be reflected? 30 purchases. Should they reflect 35? No. Should they reflect 25? Are you understanding? So entry which is not there in the book should not find place in the financial statements, and entry which is there in the book should not be omitted in the financial statements. Seriously, you understood what I said? What did I say? Tell me again. Same thing twice. No, I didn't say same thing twice. Yeah, entry which is not there in the book should not find place in financial statements. So in my books, there are only 30 entries. From where I got these 5 entries, they should not come. And second, entry which is there in the book should not be omitted. So here there were 30 entries in my books. Where did 5 entries go away? I didn't pass them. Okay, right. So that is the next point. None of the entries in the books of account have been omitted in the process of compilation, and nothing which is not found in the books has been found place in the statements. Right. So that means as per the books, how many entries are there? 30. But how many you recorded? 25. Or as per the books, how many entries are there? 30. But you recorded 35. You have to understand. Huh? I am only going to try to make you understand. If you don't understand, don't nod your head. If friend has understood, not necessary, you have to understand. Friend will pass exam, he will not do blood donation, mark donation to you. You have to get your own marks. If you've not understood, raise your hand up. You can ask me a question. No problem at all. You understand? So one, accounts have been drawn with reference to entry. Then entry supported by underlying documents. Then none of the entries have been omitted. Then nothing which is not there has found place in the financial statement. So entry, entry, entry. Oh, is it entry, entry, entry? Yes, entry, entry, and the entry. 3 points is regarding the entries only. Yes, journal entry. You know, no, a being so and so. You write journal entry, narration. And you write that over there. Okay. Right. Yes. You're not bad. You're very good actually. Okay. You know, when I talk about entry, otherwise some student might think, oh, somebody is entering into the hall. Now, we are not talking about that entry. You say, no, now red carpet entry. So, means, my life is easy. You know, entry means ma'am is talking about journal entry. Ha. So, you see now, if any doctor or engineering student, you tell them entry. So they'll say, who is entering? What time is the entry? How the entry is? Whether the entry is on a Royal Enfield or whether it's on which entry. So you are work in progress, WIP, no? Work in progress chartered accountants. Okay, right. So now, yes, so first 3 points, have you understood? Entry? Entry? Entry. 3 times entry. Okay, right. Then after that, now what does it say? The information conveyed by the statements. Which statements? Financial statements is clear and unambiguous. So whatever information is reflected by the financial statements, it should be clear and unambiguous. What is ambiguous? I will explain it to you so that you can understand what is unambiguous. You know jelly? Jelly, if you know jelly with jellyfish or jelly which you eat also, how that jelly is it transparent? Can you see through it? No, is it like, you know, the pear soap also, like it's opaque, no? You can't clearly see through it. Like jelly, is it like, can you, if I go see through jelly, can I see through it clearly? No. So what is it? It's an ambiguous liquid. It's an ambiguous. It is ambiguous. So, but should financial statements be like that jelly where you cannot see them clearly? No, they should be unambiguous. They should be not like jelly. They should be like water. Don't write in exam. They should not be like jelly. They should be like water. No, don't write all this. But I'm telling you, they should be clear and unambiguous. Are you understanding that? Then the financial statement amounts. So 4th point is information. 5th point is amounts. The financial statement amounts are properly classified, described, disclosed in conformity with the accounting standards, and accounting standards, whatever be, generally accepted accounting principles. Okay. And then the statement of accounts. Last point, what do they say? The statement of accounts as an integrated whole, whether it presents a true and fair picture. They say true and fair picture or true and fair view. Same thing. And a true and fair picture or true and fair view of the operational results. Operational results. Statement of profit and loss, and assets and liabilities. Balance sheet. Wonderful. See, you've understood this. Definition of auditing, and what are the points over there? Do you understand this? Right. So accounts. So financial statement, should they be leading or misleading? They should be leading. Should they be honest? Right? They should be honest. Now, how I can satisfy myself, that these accounts are not misleading to anybody? So, accounts should be drawn with reference to the entries. Entries should be supported by the documents. Then none of the entries should be omitted, and nothing which is not there should find place in the financial statements. Then financial statement information is the clear and unambiguous. Then the amounts have been classified, described, disclosed in accordance with the accounting standards. And the statement of account taken as an integrated whole gives a true and fair picture of the operational results and of the assets and the liabilities. Is it clear to everyone so far? Okay. Right. Now let's come to the next heading, that is the objectives and the scope of the audit. Are you all there? Right, coming to the next heading over there, the objectives and scope of audit. And for that, I'm just going to start with, I'm not going to take it entirely, we'll do it in bits and bits. I'm going to start with the discussion on the first standard over here, SA 200. Because what did I tell you? 14 standards, I will do it with the 9 chapters only. 17 standards, I told you I'll do it with the 9 chapters only. Right, so SA 200. And what is the title? You understand title? Like, AS2, does it have a title? AS2, Accounting Standard 2. Valuation of inventories, it has a title over there. Similarly, auditing standard, it also has a name, it has a title over there. So what is the title of SA 200? Overall objectives. Are you all with me? Please write down in your books. Overall objectives of the independent auditor. Oh my God, again that word has come, independent. So which type of auditor he should be? Independent. So overall objectives of the independent auditor and the conduct of an audit in accordance with the conduct of an audit in accordance with the standards on auditing. So can I do the audit as I wish? No, I need to do the audit as per the auditing standards. Can I do the audit as I wish? No, I need to do the audit as per the auditing standards. Right, so overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. Or otherwise, had they not wanted you to do the audit as per auditing standards, you could have told them, just tell me what is the overall objective and I will do the audit, don't worry. No, but it says, we will tell you, we means who? Auditing and Assurance Standard Board of ICAI. They have issued this auditing standard. Okay, what are the overall objectives of the independent auditor? And then also, what does it say? You have to do the audit in accordance with the standards on auditing. Okay, right, one of the most important auditing standard at the intermediate level. Right, when I discuss concepts or different types of headings and questions with you, just to make your books or your discussion or some analysis over there, right, I use different types of headings. There are different types of markings, where some headings I call it as ATF, that is all-time favorite. Like this is all-time favorite of the ICAI, very favorite area for questions in the institute. Right, with the ICI. Sometimes I use a reference called as R raised to 10 or R raised to 50. That means read, revise 10 times, 50 times before the exam. So in simple language, it is something which is very, very important. Right, then some questions, if you find some questions important, you put stars over there, no? So instead of putting stars, we write 5 star. So instead of putting the stars, we simply write it as the 5 star. And then, there is something new which comes up. So what we do, lately, nowadays, ICI is asking a lot of questions about this one. Earlier, it wouldn't used to ask. Nowadays, the trend is seen, these questions are being asked a lot. So we mark it as trending. So doesn't matter what it is. For you, it is a question which is going to give you marks in the exam. You understand, no? Your objective is very, very clear. Whether it is an ATF or R raised to 10 or whether it is a 50 or a 5 star or a trending, then there are some questions which are there in the RTP. RTP? Revision test paper, which have not yet come into the suggested. That means they've not yet come in the exams. The question is there in the RTP, revision test paper, but not yet asked in the exam. So these questions, we call them as the waiting list questions. Waiting list, because they are all waiting. They are all loaded in the gun, but they are yet to be shooted. And a waiting list questions. You understand? And a waiting list, a RAC. The seat is yet to be confirmed. They are in the waiting list. You understand? So you don't need to bother. My purpose, you will realize after few days of the class with me that what ma'am does knows. One question she'll mark as R raised to 10. Next question she'll mark as ATF. Next she'll mark as 5-star. Then she will mark it as trending. And ultimately she'll convey to us that everything is important. Because you will think, why to study this question? Arey, this is 5-star, no, padna padega. Why you are studying this question? This is trending, no, nowadays, I have to study it. Why are you studying the R raised to 10? At least let me study it 5 times, like that. So, it is just like that, like just for your mental, just, how to a small child they feed food, no? Look, crow is coming. Look, sparrow is coming. Look, buffalo is coming, aeroplane is coming, something, or police is coming, something is coming and going, and the child sees where it is. This is trending, this is waiting list question. Are you understanding that? But basically, arey, listen to me, re. Don't talk. Okay, your time will come. Once you become an audit teacher, you'll only have to talk. Okay, till that time, keep quiet. Okay, right. So basically, there are 2 types of question which you need to study. Only 2 types of question. Now, is it better? Instead of so much of variety, I give you only 2 types? You have to study only 2 types of question. One type of questions which have already been asked in the exams, and second, questions which are yet to be asked in the exams. That's it. Whenever you see a question, you need to ask a question, whether this question is already asked. You say, oh, this is already asked. You better study because it can come again. You say, this question has never been asked. You better study. It might come in your exam. Simple. Very simple. No, not simple. Weighted average? Huh? No, my book has only 2 types of question, already and yet. Only 2 types of questions are there. So either it has come or it will come. Like they say, no back pain. Either you had back pain or you're having back pain or you will have back pain. That is what they say for back pain. So something like that. So you don't have to consider about back pain over here, but it is about the questions over here. Is it fine for everyone? Okay, right. So anyways, let us come to essay 200, overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. That is the title of essay 200. Okay. In our audit report, yes, everyone, don't talk. Yes, in our audit report, we write down a sentence. You know what sentence we write in our audit report? We conducted. Who we? Auditor. The audit firm. We conducted our audit. So now we did our audit of the standalone financial statements in accordance with the standards on auditing, as specified under section 143.10. So what are the standards under 143.10 of the company law? Standards on auditing issued by ICAI only. Okay, but see, we write it in our audit report also that we've conducted our audit in accordance with the standards on auditing. So do I need to follow the auditing standards while conducting the audit? Yes. So now over here, let us look into essay 200, overall objectives. Everybody, please tell me the title of essay 200. Overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing. And anyways, the entire story I told you because essay 200 is an ATF. And the entire standard is an ATF. It's an all-time favorite of the I. Now, some students are saying ATF is aviation turbine fuel. I'm going to hit you, huh? Those who are saying all these things in the class. Say, ma'am, I didn't say anything. You are only saying. ATF is what? All-time favorite. Oh, take care. Okay. Right. So, what is the overall objective of the auditor, right? You are appointed as an auditor. Yes, everybody, please listen to me very, very carefully. I'm coming to one of the most golden discussion in the entire subject of audit. Right, one of the, not only in this particular chapter or this particular standard, in the entire subject of audit, I'm coming to the one of the most glorious and golden discussion over there. Right, so objective. Objective is something which you want to achieve. Okay, so what is the objective of the independent auditor, right? What is the objective of the independent auditor? The objective of the auditor is to obtain. You know, to obtain. To obtain means what? To get. To obtain means something that you want to get, to obtain. Now, what he wants to obtain? You know, who is he? The auditor. What he is doing? He is doing audit of the financial statements. Are you able to relate? Did we discuss the definition of audit? Mainly we are talking about the financial statement audit, true and fair audit. Is it right? Right. So what is the overall objective of the auditor? To obtain the reasonable assurance. What auditor needs to do? He needs to obtain what? Reasonable assurance. What is reasonable assurance? Coming to that. But we know the name of the subject, no? Audit and assurance. So now we come to know in audit what type of an assurance do we give? Reasonable assurance. Okay, but we'll come to what is reasonable assurance. To obtain reasonable assurance that whether the financial statements, you know financial statements, right, are free from material misstatements, whether the financial statements are free from material misstatements, whether due to fraud or whether due to error. Fraud, intentional. Error, unintentional. Error done intentionally becomes a fraud. So what is the overall objective? To obtain reasonable assurance that the financial statements are free from material misstatements, whether due to fraud or error. What is this term free from material misstatement? We'll come to that. Thereby enabling the auditor to express an opinion. This is, so I told you, the objective of audit, no? To express an opinion. Whether the financial statements have been prepared by the, who prepares financial statements? Management. By the management in accordance with an applicable financial reporting framework. Applicable financial reporting framework. AFRF. What is AFRF? Applicable financial reporting framework. And then ultimately to report what? The findings of the auditor, and how to report the findings of the auditor in accordance with the standards on auditing. Right, so this is the overall objective of the independent auditor. What is the overall objective? To obtain reasonable assurance that financial statements are free from material misstatements, whether due to fraud or error, thereby enabling the auditor to express an opinion as to whether or not the financial statements have been prepared by the management in accordance with an applicable financial reporting framework, and then to report the findings of the auditor in accordance with the auditing standards. Are you understanding? Right. So now we need to discuss three terms over here: reasonable assurance, free from material misstatement, and applicable financial reporting framework. Once we understand these three terms, will we understand the overall objective? Once we understand these three terms, will we be able to understand the overall objective? So this objective as per SA 200, overall objectives, and if I at the end of this particular standard chapter, there is SA 200 over there. What is SA 200? Overall objectives of the independent auditor and the conduct of an audit in accordance with the Standards on auditing. What is the overall objective? In conducting an audit of financial statements, everybody read with me. The overall objectives of the auditor are to obtain the reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with an AFRF. What is AFRF? Applicable Financial Reporting Framework. And then to report on the financial statements and communicate as required by the standards in accordance with the auditor's findings, right? So to issue a report in accordance with the essays as per the auditor's findings, right? What are these? These are the overall objectives of the independent auditor. And what did I say? I need to discuss 3 terms with you. Which are the 3 terms we need to discuss? Reasonable assurance, free from material misstatement, and applicable financial reporting framework. Okay, so now we'll discuss the first term over there, applicable financial reporting framework. Everybody please keep on writing with me. These notes will be very beneficial for you when you're preparing or later on studying for your reference. Okay, so applicable financial reporting framework. Right, applicable financial reporting framework. Okay, right. What is financial reporting? Is applicable financial reporting framework. But what is financial reporting? Financial statements. Okay. Financial reporting. Presentation of financial information in a meaningful manner. Okay. You know CA final syllabus? No. I'm so happy. There are 2 groups over there, group 1, group 2. Group 1, 4 papers. First paper, FR, financial reporting. You understand? So financial reporting in simple language is accounting. Accounting. So, applicable, so can I call it as applicable accounting framework? Array, is it right? Yes. Applicable accounting framework. Okay. Right. Do you know how to convert a sentence from active voice to passive voice? How you convert? So if this is active voice, applicable accounting framework, left to right, how do I? Framework accounting applicable. Very dangerous you are. Full entertainment in the morning only. Framework which is to be applied by doing the accounting. Correct, na? Left to right. Applicable accounting framework. Right to left. Framework to be applied while doing the accounting. That means, can I say it is the framework, it is the laws and regulations, LNR. What is LNR? Laws and regulations, which are to be followed by the who? Management in the preparation of the financial statements. It is the framework, it is the laws and regulations which are to be followed by the management in the preparation of the financial statements. That is what you mean by AFRF, Applicable Financial Reporting Framework. Okay. Example. Okay, give me good answers. Example of an AFRF for an Indian company could be Indian Accounting Standards and Schedule 3 to the Companies Act 2013. This is an example of an AFRF. If the company is listed on the US Stock Exchange, then it prepares its financial statements as per the US GAAP. Then the applicable financial reporting framework is the US GAAP. If the company is listed on the UK stock exchange, then it prepares financial statements as per the UK GAAP. So in that case, UK GAAP is the applicable financial reporting framework. Do you understand, everyone? It's a very technical term, but it keeps on coming again and again. Applicable financial reporting framework. The framework to be applied while doing the financial reporting. That means the framework, the laws and regulations which are to be applied by the management, which are to be followed by the management in the preparation of the financial statements. Is it clear to everyone? Okay, right. Now coming to the next term over there, free from material misstatement. Are you all with me? Right, coming to the next term over there, free from material misstatement, whether due to fraud or whether due to error. Okay, right. So first let us only discuss the term misstatement. When would you say that this is a misstatement? So one, like we said, na, leading and misleading. Today did we discuss leading and misleading? Entries, we had discussed leading and misleading. Similarly, over here, statement and misstatement. So instead of being a statement, it is a misstatement. So when would you say, oh, this is a misstatement? Wrong statement? When would you say, arey, this is the misstatement? When it is misleading, okay. When it is not? When accounting policies have not been properly followed, okay. When would you say this is a misstatement, not a statement? Okay, ambiguous, okay. When it is not honest, okay. Can you give me an example of a misstatement? Can anybody in the class give me an example of a misstatement? Give me a more concrete example. Yes, exactly. Like I told you, company has 700 bank accounts. Only 500 bank accounts have been reflected. Is it a misstatement? Yes. Value of a building was how much? 10 crore. At what price it is shown? 20 crore. Or what price it is shown? 2 crore. So what is it? It's a misstatement. Are you understanding that? You remember, na, assets are neither undervalued or overvalued. No material asset is omitted. Any charge created is separately disclosed. Are you understanding that? Right? So misstatement, right? So misstatement means what? Yes, what is the definition of a misstatement? It says an amount classification presentation disclosure. What is ACPD? Amount classification presentation disclosure of a reported financial statement item and yes, did you get the first part of the definition? Amount classification presentation disclosure of a reported financial statement item and the amount classification presentation disclosure, again ACPD. What is ACPD? Amount classification presentation disclosure that is required for that item to be in accordance with the AFRF, which is required for that item to be in accordance with the AFRF. Right, so what is the amount classification presentation disclosure? 20 crore. What it should be in accordance with the AFRF? 10 crore. So the difference between the two, difference between 20 crore and 10 crore, how much it is? 10 crore, that is a misstatement. So difference between amount classification presentation disclosure of a reported financial statement item and the amount classification presentation disclosure that is required for that item to be in accordance with the AFRF. If I'll come to this slide again, but to make it more simple, difference between, what is misstatement? It is the difference between what is and what should be. Amazing. Difference between what is and what should be. What is 20 crore? What should be 10 crore? Difference between the two, 10 crore is a misstatement. MS means what? Misstatement. If I look at it technically, this is the technical definition. An amount class, what is the amount of classification, presentation, disclosure of a reported financial statement item? This is what is, and the amount, classification, presentation, disclosure that is required for that item to be in accordance with the AFRF. That is what should be. That is what should be. Right? Amount or classification. Okay, it has been classified under rent. It should have come under traveling or presentation, disclosure. Is everybody able to understand the word misstatement? Okay, right. Now let us look at the next word over there. Material misstatement. Are you with me? Material misstatement. Okay, now what is materiality? Yes, you know fundamental accounting assumptions, right? And then you have the considerations also. What are the considerations? Prudence, substance over form, and materiality. You know, prudence, all anticipated expenses and losses are to be provided for, incomes and gains are to be ignored. Then foreseeable future, and also materiality. Right? For yes, going concern, that is the entity has a foreseeable future, and also you have the materiality. Okay, so now materiality means what? Significant. Any item or information which might influence the decision making of the users of the financial statement. So, you know, had I known this, I would have not taken a decision to purchase the shares of this company. So, it is affecting my decision making. So, that is material. You understand? So, now, what does it say? What is material misstatement? Material difference between what is and what should be. What is material misstatement? Material difference between what is and what should be. Okay, now how to determine materiality and all of that? We have a standard SA 320. Right now this will all look very alien to you, but as and when we discuss, they'll become more familiar to you. We have SA 320, which is on materiality in planning and performing an audit. We'll discuss it in the next chapter, but right now I'm just telling you about it. Materiality in planning and performing an audit, right? So materiality. Right, so now say, right now I'm taking it as an example. Practically when I'm doing an audit of an entity, how I determine materiality, I will discuss about it. But say example materiality is 5 crore. How much was the amount? 20 crore. What is? What should be? 10 crore. So difference between the two? 10 crore. Is it a material misstatement? Yes, because materiality is 5 crore. So is this a material misstatement? Yes, it is a material misstatement. Say example materiality was 80 crore. Say example materiality is 80 crore. Auditor says anything above 80 crore is material for us, anything below 80 crore not material for us. Right? So in that case, this 10 crore, will it be a misstatement or will it be a material misstatement? This will only be a misstatement. It is not a material misstatement. Are you understanding that? It will only be a misstatement. It will not be a material misstatement. So what is material misstatement? It is material difference between what is and what should be. What is material misstatement? Material difference between what is and what should be. That is material misstatement. Right, and then what does it say? Free from material misstatement. Right, what does it say? Free from material misstatement. What do you mean by free from, what do you mean by free from material misstatement? Free from material misstatement? See, we discuss misstatement, then we discuss material misstatement. Now I am talking about free from material misstatement. That means what? There is? Exactly. There is no material difference between what is and what should be. A misstatement can come due to fraud or it can come due to error. That means there is no material fraud or error. Simple.
So does that imply that we will ignore the misstatements which are not material?
Yeah, exactly. Because we are giving an assurance that reasonable assurance that financial statements are free from material misstatement. So immaterial might be there. Like Reliance Industries, how much is their revenue? 4 lakh crore. You understand? Even if I take 1% of their revenue, it is coming to 40,000 crore. You understand? So if there is an error of like say 12 crore or 13 crore, nobody will even look at it. They say any big entry of 30,000 crore, 40,000 crore, then come to me. Otherwise, don't come to me. You understand? So material. Yes.
Doesn't this materiality concept is subjective from person to person, from company to company?
Yeah, exactly. When I'm doing the audit of Reliance, I will determine materiality. When I'm doing audit of Infosys, I'll determine materiality. When I'm doing audit for 2025, I will determine materiality. When I'm doing for 26, again I will decide different materiality. Huh? No, how there can be? Reliance turnover is 4 lakh crore and another company turnover is 1 crore. How you can have one standard amount? It can vary. It has to vary. You have to determine. When you do audit, you have to determine materiality. How to determine materiality? That we will discuss in SA 320. Arey, listen to me. Yes? Do you understand free from material misstatement? No material difference between what is and what should be. That means there is no material fraud or error. That means more simplest language. Okay? There is no material fraud or error. There is no material difference between what is and what should be. Okay, because now, if there is a material misstatement, I hope everybody understands the term misstatement, material misstatement, free from material misstatement. Okay, if there is a material misstatement, are you listening to me? If there is a material fraud, if there is a material error, can the financial statements be considered to be giving a true and fair view? If there is a material fraud in the financial statements, if there is a material error in the financial statements, will such financial statements give a true and fair view? No, they cannot give a true and fair view. So for auditor to express an opinion on the true and fair view, he needs to obtain a reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. Are you understanding that? Reasonable assurance that financial statements are free from material misstatement, right, whether due to fraud or error, and to express an opinion whether financial statements have been prepared as per AFRF. Can management prepare financial statements as they wish? No, they have to prepare them as per the applicable financial reporting framework, and then whatever are the findings of the auditor, how he will report. Can auditor report as he wish? No, for auditor also there is an audit report format. There is an essay 700, forming an opinion and reporting on financial statements. So your format of audit report has been given in essay 700. So you have to report as per essay 700. Are you understanding that? Okay. Now coming to the third term. So did you understand these two terms, free from material misstatement and AFRF? Right, now coming to the third term over there, which is the reasonable assurance. Right, now coming to the third term over there, which is regarding the reasonable assurance. Okay, right, reasonable assurance has been defined to be a high level of assurance. So how they have defined, what do you mean by reasonable assurance? It says it means an high level of assurance, but not an absolute assurance. But not an absolute assurance. Like that, what does that mean? High level of assurance. Like, can I say 99.999999% assurance? High level. It can be 93 also, 95 also, anything which is high. 80 can also be high, but anything which is high. But can it be 100%? No, it cannot be 100%. That is for sure. Anything less than 100% is a high level of assurance. Now, how much should be that high level? That auditor needs to determine. That auditor needs to determine. So, reasonable assurance is a high level of assurance, but not an absolute assurance. Okay. Why? What is the problem? Why auditor cannot give 100% assurance? Absolute means what? 100% assurance. Why auditor you cannot give 100% assurance?
Material misstatements
Immaterial misstatements might be there, okay. Why you cannot give 100% assurance? You know, if I could have given 100% assurance, listen to me very carefully, again a very important discussion, reasonable assurance. Could I give 100% assurance, absolute assurance, I would have said true and? Array, correct. But because I am only able to give a reasonable assurance, that is why I am expressing an opinion saying true and fair. Are you understanding that? Okay, now what happens in case of the now for an auditor, if anybody asks you, okay, on what basis are you saying true and fair? On what basis are you saying that these financial statements are free from material misstatement? You should be having some basis for your opinion. You understand? You say, why you are saying that the vegetable is salty? There should be some basis. Why you are saying the movie is not good? So you say you have some basis for your opinion over there. So similarly, for the auditor to express an opinion, the auditor needs to obtain the evidence. Okay, so I have come to a very classic term of essay 200 or essay 500 also, which is audit evidence. What is the title of essay 500? It is audit evidence. Audit evidence, essay 500. Okay, what do you mean by evidence? Evidence doesn't mean proof. Had I got proof now, I would have given absolute assurance. Because I'm not getting a proof, that is why I'm giving only a reasonable assurance, right? So what is evidence? Supporting. Evidence in very simple language, evidence means information. Evidence means information. Evidence means information. And in the audit, what type of evidence I mainly obtain? It says in an audit you mainly obtain the persuasive evidence and not the conclusive evidence. In an audit you mainly obtain the persuasive evidence and not the conclusive evidence. What do you mean by persuasive? Something which is most likely to be true than not. Most likely to be true than not. And what is conclusive? Only that is true. And any other possibility is ruled out. You understand? Now what does it say? Most likely it will rain today. And most likely, weather forecast department, what does it say? But sometimes what happens, they say it will rain and it actually rains. And sometimes they say it will rain, but you see the sun is shining bright. No rain at all. Are you understanding? So what is that? Persuasive. Most likely to be true, but can't say 100%. But absolute conclusive is what? Only that is true and any other possibility is ruled out. What happens in an audit? What happens? We obtain the persuasive evidence. So if I get persuasive evidence, then I am able to give the reasonable assurance. Had I got the conclusive evidence, I would have given an absolute assurance. But yes, what does it say? And why I am giving only the reasonable assurance and not absolute assurance over there? It says because there are certain inherent limitations of an audit. There are certain inherent limitations of an audit. Like just imagine Reliance Industries revenue 4 lakh crore. Are you going to check the entire revenue of 4 lakh crore? Reliance Industry revenue 4 lakh crore. Are you going to check the entire revenue of 4 lakh crore? No, you will do sampling. And you will check a few selected samples. Are you understanding? Then there is human error also. And a possibility that you may not detect a misstatement or so. Are you understanding? So there are certain inherent limitations of an audit. That is why the auditor gives a reasonable assurance, which is a high level of assurance but not an absolute assurance. Are you able to follow till here, everyone? What is the overall objective of the independent auditor? To obtain the reasonable assurance that financial statements are free from material misstatement, whether due to fraud or error. So am I saying 100% these financial statements there is no material fraud or error? No, I'm not saying 100%. I'm saying only high level, 99 percent types, 90+% type, and a high level of assurance that the financial statements are free from material misstatement, thereby enabling the auditor to express an opinion whether financial statements have been prepared by the management. Who needs to prepare? Management. How? In accordance with the AFRF, Applicable Financial Reporting Framework, right? And so just one last point and then we stop. You know, see, company, they need to prepare financial statements as per accounting standards. Auditor, he needs to do the audit as per the auditing standards, and he also needs to check whether company has complied with the accounting standards while preparing financial statements or not. The auditor, see, company doesn't need to follow auditing standards. Company only needs to follow accounting standards. Auditor, you need to follow auditing standard, and you need to, by your auditing standard, you need to check whether company has followed the accounting standards. So auditor needs to have knowledge of both these standards. Accounting standards also and auditing standards also. Are you able to understand that? Right? Accounting standards, and accounting standards is nothing but the applicable financial reporting framework, right? So next session we continue with our discussion on chapter number 1.